Hello, I'm Mary O'Hara Devereaux. Welcome to Hot Dispatches from the Front Lines of the Future. Today I want to share with you my 2012 forecast for the U.S. economy. The good news is that the economy proved remarkably resilient in the end of 2011 by the fact it didn't go into a recession despite the fact that there were several major adverse shocks, including, of course, the Japanese earthquake and tsunami and all the aftermath of that. But what we're looking forward to in 2012 are still some pretty strong headwinds. So we can only expect marginally better weather with some of the same volatility that we experienced in 2011. So we should see growth flow between about 1.8, 1.9 to 2.5. And there's no consensus about whether the first half of the year is going to be somewhat better or the second half of the year, but that's kind of the range. So it will continue to be a better but anemic economy all through 2012. These headwinds are pretty strong. The most serious headwinds for the U.S. economy is the European sovereign debt crisis. We expect to see Europe in a mild recession during most of the year, at about 0.5 contraction. We can weather that, but if it becomes a prolonged recession that gets deeper over more months, the whole year, maybe into 2013, that really is going to slow down and drive, perhaps negative growth in the U.S. economy, and also will slow global trade and other global economies down as well. So that's the really big one that's lurking out there. It's a very dark scenario. Second, competing for first place, is the United States fiscal drag. Current policies that came to be at the end of 2010 and last year, not the stimulus and those that were put in 2008, 2009, really are going to take about 1% off of GDP this year. If we don't make changes in those policies and we don't get productive decision making in the Congress during 2013 around a number of critical issues from the debt to the Bush tax cuts, we're going to see about 2.5% shaved off GDP in 2013. None of us want that, so let's hope that we can get some better decision making in Congress. Another strong headwind is that we still have the foreclosure conundrum. Distressed houses, houses whose mortgages are underwater, which is still about 15 million in the U.S., they're the pig in the python, the pig being the foreclosures, the python being the bank, but they are beginning to move through. And likely the biggest bulk of them will fall through in 2012, so we're going to see distressed home sales go up. That's going to be a break. After that, though, in 2013 and through 2014, we should see that come down rather rapidly and really see the end of that. We will continue to see distressed home prices fall because of the marketplace and what's happening in the marketplace. That also will be dampen the economy. We also see that consumers have really made a shift to thrift. They are spending again, but they're not spending that much. Good enough is what they're looking for rather than always going for the best. And this is holding true even to some extent in the high-end consumers, which is very important because that 20% of consumers in the U.S. does about 60% of the expenditures and purchases. So that's another strong headwind. Now the good news, of course, in the economy is that exports continue at high levels for the U.S., and this is very good. It's really a huge driver of the economy. The other weak signal that's very good is that we're beginning to see there's a bifurcation in the real estate market. Distressed home prices are going down, but the non-distressed homes, which are the bulk of homes, really have stabilized out, and in some regions, in sections of the marketplace, they're actually starting to come back up. So that's a really good signal that should turn into a trend over the next year, that we have bottomed out in the majority of the housing market, and that will soon diminish as a headwind or a brake on the economy. So, of course, we always have to still consider the wild cards, those low probability, high impact events that, if they did happen, would have a huge impact. They're only about 2% probability, but you should keep them in mind. One would be that the U.S. does go into a recession. Secondly, we might get true bipartisanship in the Congress, and that could actually drive more growth, could accelerate and push GDP up in 2012. The China real estate bubble, which is massive and big, could collapse in a way that drives China's growth down to 5% or less, which would be a disruption in global trade and really affect the U.S. because they're such a strong purchaser of our higher end exports. And then last but not least, we have to keep in mind that we could have a pandemic of either a real virus like the Asian flu virus or a synthetic virus that actually could be large enough to shut down global trade and sort of see borders closed as we try to contain it. Despite the long-term uncertainties, and if you want to look over those, go on my website and click into my forecasts from last year that lay out those long-term uncertainties. But let's look at the reasons for optimism. At the end of 2011, the unemployment rate had dropped to 8.5. That's its lowest in 3 years. Now, it's unlikely to go below 8 this year, and it's unlikely to really get below 7% until about 2015. But the private sector is hiring more across more regions and across more industry sectors. The housing conundrum, as we discussed, is beginning to sort out, so that we will see increased number of jobs, and the unemployment rate should continue to fall as we get through 2014, 2015, and then get down to a more normal sort of acceptable rate, probably close to 6% as we get closer to 2020. Another reason for optimism is businesses have cash. They're sitting on over $2 trillion worth of cash. The liquidity and profits in business are at a 50-year high. We haven't seen this level for 50 years. And so that they're just waiting to get the confidence to take that leap of faith and actually begin to invest in growth. And this could be the year. Banks have recapitalized. Now, they haven't totally recapitalized. The amount of work they have to do on a number of fronts is still in progress, but they've done so to the extent that credit is flowing more easily, not at the level that we would like. They've gotten their balance sheet somewhat cleaned up, so they're sort of positioned to do more lending. But credit lending is still not at a level, and the ease of getting credit, particularly to grow your business, are not at the level yet that it can really fuel expansion. So let's hope some of that opportunity comes this year. Consumers have reduced debt. In fact, they've reduced their debt now, credit card debt, auto loan debt, other consumer finance debt, down to the point that this deleveraging now has gone so far that they're going to start to expend more. It's kind of at that tipping point where they're feeling more comfortable about spending and not just pushing so much into paying that debt down. Exports continue to be high. They've really been the huge driver of growth in the U.S. economy over since this recession began. They kind of turned it around. They're at record highs. They're not going to grow as fast as they have in the past couple of years because we've got some slowing in the emerging markets. But they will grow and continue to grow. Asia looks poised to have a reasonably good year, with China around 8% and sort of world Asian GDP in general around 6%. So that's going to keep exports up. And then last but not least, reason for optimism is that inflation is abating around the world. It's well managed in the U.S. Core inflation has not gone up. There has been some inflation in commodity products. But this is now coming down. These have stabilized out. And because of the slowing growth and the policies in the emerging economies, you're seeing inflation abate around the world. So that will keep prices in line. So there's lots of great reasons for optimism. And my recommendation is, finally, I've been waiting to be able to say this for a few years, it's really time to begin to navigate out of these badlands that we've been in for a number of years now. This really is the year to take that leap of faith, even though we've got an anemic economy, and really get ready to be positioned for the long term. Because that's what's coming next. There will be ups and downs. So what to do? First of all, I think that you need to get ready for a game plan for sort of really a new context, because this is changing. These small, weak signals and beginning trends will shift and become major driving forces. And you want to get there early. You want to get positioned before those trends hit big. So this 2012 is a great year to get going on business. And you don't want to wait, because in a sense, what that's going to be is being the arsonist in your own fire. Because your competitors, enough of them are going to get ready, and they'll be out ahead of you. So the first thing to do is to really tune up at least, and probably really create a new vision. Because the future won't resemble the past, so you don't want to just be incrementally sort of continuing on what you've been doing, unless there's really a good reason based on the future to do that. But really create a new vision, and really think about what are the right changes for you to do, considering how different the future will be, particularly as we get out 2014, 2015. Next, you really want to map your sweet spot. You may have had a sweet spot with certain kinds of consumers, customers, products, services, but what's your sweet spot of the future? It's not likely to be exactly what it was in the past. So once you get that vision set, then really begin to think about where can we really grow fast, grow well, radical innovation if you need it, creating new market space, because there'll be lots of opportunities for that, and you can get traction on that this year. Then secondly, you really want to look at your competitive advantage. Just go back, re-look at it, don't get trapped by what it was in the past, and really figure out what's your new secret sauce, and what really sets you apart. Go through a differentiation process, and really push the edges of your thinking on that. And that should help you really tell the story, as you put those together, of what's your new growth strategy. How are you really going to drive growth over the next 3 to 5 years? Bringing that secret sauce, bringing that sweet spot together. And then take a look at what are the internal changes. Are you really ready as a business, as an organization, to accomplish this? That's unlikely. Most likely there are some significant changes you need to make inside, whether it's changing some of your team, different kinds of processes, new marketing, new sales program, whatever that is, but really match that up. Make the changes that you need to make internally. The lack of making internal changes is usually what trips up companies as they move into a new strategy. And then hire A players. You're going to need to do some new hiring. You probably have put the lid on doing hiring. But now's the time to hire, and it takes time to hire A players. So get started on that early. I've advised you in the past to always keep a list of the people that you'd like to hire. So when it comes time, you've touched them, you've reached out to them, you know who they are, you've got some thoughts about how you're going to bring them on board, or maybe even told them you want to. Now's the time to get them, if they're A players that fit with your new vision. And then finally, really take a look at yourself as a leader. What do you need to change? How can you trade up your leadership to really be able to lead this new organization, this new strategy to success? So good luck in 2012. I think it's going to be a good year. Take that leap of faith, take some good risks, but be sure to do your homework and kind of create the new vision and new story about who you are and how you're going to get there.